What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Tonight, I am looking at 62 Liberty Street in Tiffin, Ohio. This is another property brought to Lofty by M1 or Josh, depending on if you go by his Discord name or not. If you've already seen me go through a few of his, I'm going to have a lot of similar comments, but this one, I think it's a little bit more interesting. He's bringing it on as as a value add deal. He's mentioned some things, as far as being able to improve the value. I think that really only works if the goal is to hold relatively short term, but I'm gonna talk a little bit about that strategy and do some math on it. After we do just our normal due diligence items on here. So let's see. Let's get started. Obviously, I spent some time looking at the street view. Looks like a decent little area. One of the things, and this has been true for pretty much all of his, is very little crime anywhere nearby. I mean, this is a shooting, but this is really far, right? Like it's not even the same town. This is, how far back? I didn't even look how far back because there's so few numbers. Um, Yeah, I mean, we're going months back to find this, spot crime's not even filling up the map, and it's going back 6 months, so or seven even, or six, I guess. Um, so yeah, I mean, that's one of the things that this has really going for it. So I like that. Let's see though. I spent a little bit more time just reading about the market. It is, it's one of these. Rust Belt type markets that is just had a continually shrinking population. It's one of the main reasons that this is not the type of deal that I typically invest in, at least not for the long term. I have a lot of markets like this in my Lofty portfolio, but it's always looking to buy at a discount, get out cheap. My long term expectations for these markets are not great because as population continues to decline, unless that turns around, um, that's where your demand side for your housing is. Uh, I guess one thing that they do have going for them is there's a lot of dilapidated properties, so they're losing some housing stock as we go as well. I know that seems weird to say that is something they have going for them, but it is. It's probably why homes that are properly maintained are maintaining their value, because as there are less people in the area, but there's also less homes that they'd be willing to rent. I also talked a little bit last time about how I think, you've seen this going on for a very long time, but over that same period of time, um, average household size has changed significantly. And so that spread more people out, or spread people out more for the same number of people. They need more housing units. And I think that's really counteracted a lot of this, decreasing demand. But I just don't know how much further that can go because we already have now, typical average households are very small relative to what they used to be. I mean, it, when when you had maximum populations in a lot of these places. So I don't know. That's something that I think a lot about. That's why for my long-term money, I like to be in markets that are growing. I like to see that demand side working. But I've talked about that quite a bit. The one of the things I was just reading about, like, okay, it's the home of these two universities. It made me curious because it's a very small town to begin with. It's like 17,000 residents. But each one of these is really small. One had 1,000 students. The other one had 3,500 students. I know a lot of people like to invest in college towns. My very first investment property was in College Station, Texas. I think in general, there's more risk to the downside for a lot of college towns than there is in other places because enrollment has gone down, in a lot of schools over time, or uh, you know, virtual enrollment has gone up in some places, or people just going to school 1 or 2 days a week and really commuting further because they can do a lot of their classes online. We've seen more and more of that. And, I think for sort of flagship universities that people go to really for the experience more than anything else. Like, for example, Texas A&M, that is it's that whole town, College Station, is built around the university, but people go there for the experience, and so I think that it's going to experience that effect less than sort of some of the other schools that are. I think a lot of these really small schools, it is not, it's not the same thing, right? You're really just trying to get the specific education there. And the more that goes online, the more, I've just been avoiding college towns in general for quite a while, because of that. But I know there's lots of people that disagree with me about it. It's just one of the things that I think about with them. So let's see, we got those two things. Oh yeah, I did the spot crime map. The flood map, I always look at this. It does look like the back of the property is in a flood zone. When you actually look at the property, it looks like it's raised up where they built on it. So I think that's probably why front half isn't. It's probably a little bit more elevated. Um, I typically tend to avoid properties that are in flood zones altogether. Where none of the home is, I have been okay with some properties that are like this. If everything else were perfect about this and I was excited about the deal, this, I think this probably wouldn't stop me. But one of the things that I have noticed is that floodplains do move over time. And so, when you're even just really, when some of it's touching your property, when they get redrawn, it just really depends on, if it's going to end up triggering you needing flood insurance or not. But at the moment, it looks to me, at least from looking at this map, that it's not touching any structures, unless I don't know what this is, if this is like a shed on the property or what. Um, but I think it would keep you from doing any sort of building in the back there if you were thinking, if one of the thoughts was to build a second unit. I'm not sure that that's going to be possible. It'd be something that I always am thinking about. Where's that flood zone, and how's that affecting us? Um, this had one of the promising. So Tiffin, the housing market there had one of the most promising, um, median housing curves that I've seen in a while. They did have this pop and a dip, but it's been pretty much up from there. It is, there's only 44 units available for sale, so it's a very thin market. We're gonna see that when we get into the pricing of it. Oh, one thing I wanted to show you. So sorry, my computer just froze there. This note is a little bit odd, right? It's a 3 bedroom, 1 bathroom home with value add potential. It's officially listed as a 2 bedroom, but the addition includes a third bedroom So I'm not sure if that was done, and I think that was done in 2016 or 2017. So I don't fully understand. Yeah, this is 2016, but the county records showed it as 2017. They might have just not caught up right away. But I don't understand if if that's been done, why, when this was the most recently listed for sale, like, is that just not actually count as a bedroom? Is it lacking a closet or something in some markets? If you don't have a window in a closet, you can't list it as a bedroom. I'm not sure. I don't know why they're making that distinction there. But this is the county records. You can see they do a sketch of it. If you look at the home from the side here, this is the main home. This is the little front porch, and you have this addition, and then you can see this other bump out. And I think what we're seeing is this is that original home. That's the little front porch. This is the first bump out we see, and that's the second. Um, so it seems like they have picked up all the square footage that's added, but they say that it is 1,037, and this listing says 1,169. We have, it's more than a 10% difference. Um, I'd like to know why that is, and then why we can't just say this is a 3 bedroom, 1 bath. Like, is it just not? I'm just not sure why, when they say it's officially listed as a 2 bedroom, what does that really mean? Is there something we can do to make it an official 3 bedroom if we're going to try to sell it? Because that's one of the things with this one. He mentions painting the exterior, painting the roof, and that he thinks, he said one of the a local realtor told him he could sell it for 20,000 more if we did that. I think that's where that's why this is a value add deal. Um, And I think that, if I talked about this before, you can read his book. He posted it um, in the Discord at some point, uh, a link to it. I don't know. Maybe I'll try to find that. If anyone has that link and you want to drop it in the comments, that'd be awesome. But so he has that, where he talks about swing trading real estate, where he's buying, holding for a year, doing certain things to the property, and then selling to other investors. Um, when you're talking about the cosmetic type improvements of painting, the exterior painting the roof, and it's a metal roof. A lot of people, when they hear painting a roof, that sounds weird. But if it's metal roofs, you can paint them. It's not like it's a shingle roof, that because then that's really strange. Um, but that's typically going to affect the owner occupant market for purchasing that property a lot more than it's going to affect like if he tries to sell it, um, with a tenant in place, right? And so one of the things I think that is a when we were watching some of his, or when I was looking at some of his other properties, I thought, I'd like to be involved in his deals that he's doing that swing trade, right? Where he's buying it, doing his value add, selling it in a short, a relatively short period of time. I think that's how you really benefit from investing with him. Some of the ones that are just sort of like he already stabilized them and he brought it to the platform at a pretty good profit for him seemed like it's hard to want to invest in those, long term. So this one I think is a little bit more interesting to me because of that. But it is like, it's not that, especially because it's pretty much paint. That is not an improvement that lasts a long time, right? Like if you do that now and we hold this for a long time, well, when you go to sell, it's going to have to be done again, right? And so, unless it's affecting the amount of rent we're going to collect, which maybe it will, this only really works if we're turning around and we're selling it, relatively quickly. But anyway, like I said, I'm going to do a little bit of math on that in a minute. I just wanted to point out, there is this discrepancy as is three bedrooms as a two bedrooms. Um, if he bought it as a two bedroom and then we can do something so that it's okay for us to list it as a three bedroom, let's look at all these listings. I think they all say two bedrooms. Yeah, two bedroom. Yeah, two bedroom, and they all have the same square feet as what square footage as what the county has. This is actually a better picture from the back too. Can I look at that? Oh, did I break my computer? Man, I really, you hear me talk about this every night now that I'm recording these. Yeah, so this is that back addition. I don't know, but like I said, I mean, this has been there. I don't understand uh, why they're not already calling it a three bedroom if we can say this is going to be a three bedroom. So, um, okay. So let's talk about the numbers a little bit though. So the financials, he's bringing it to the platform at 78,750. Um, the appraisal, let's see. Oh, that's not the appraisal, is it? Is it this? Here's the appraisal. The appraisal was 75,000. If you remember, we've talked about this quite a bit. In these small markets where there's not a lot of properties, the appraiser's always saying like, I had to bracket this as much as I could. There's not a lot of sales in the subject market. Had to expand my search further than I'd want to. And so, sometimes we're making really big adjustments. Oh, dismiss that. Sometimes we're making these really big adjustments, on a low price, and that makes me wonder. Yeah, I mean, this one's 510 square feet. Like this is one of the best comps we could find. It's just tough, right? But okay, let's say the 75,000 is correct for now. Or that's what it's appraised at. Zillow thinks that it's worth more, right? Zillow, so he actually bought it at 65,000 in October. Zillow thinks it's gone up more than that, right? Let's see. Realtor, I think, has very high. Oh no, Realtor thinks it's actually worth less than that appraisal, and then Redfin has this crazy high number. And Redfin's not working, but oh, there we go. 137,919. I mean, this is like double what he paid for it, and it's way off from the other one. So I'm really curious. But I think that this happens in these markets because there are so few sales. Whatever the algorithm is that's calculating these has a really hard time because it doesn't have as much data plugged into it. And so then you get this like really wide value range. Um, but we already looked at this. This is going up. So let's see. It was leased in starting in January. So, um, as I mentioned, like if we were going to sell this to an owner occupant because we've done some cosmetic upgrades like painting it, uh, you would want, I think you get the most value from that sort of things, not by selling it to an investor, but by selling it to an owner occupant. And well, we can't do that until at least January of next year because now we have a tenant in it. And even though he says it's a value add deal, there's not really a description of like, well, what are we doing, right? We're going to paint it. That's going to make the value go up. But how do we extract that value, right? Like, how do we actually access it? Because that's not, if it's just, one of the things, I don't know if he mentioned it here. I think he mentioned it somewhere else. Saying it's white and black trim, that's just really trendy. That's true. It might not be when we go to sell it if we're not selling it reasonably quickly after doing this. I do want to just point out a couple of things in the inspection report, and then I'm going to jump into the numbers of that sale as well. Uh, this is very much like a lot of the other ones that came to that he brought to the platform that just have like a lot of deferred maintenance. There's been a few other people who've talked to me that are in this market and been like, this is just what homes are like here. Uh, and I think, to a certain extent, it could be true. And it might especially be true about like rental properties because their average rental rate is so low. It's hard to, maintain properties. This one isn't as low as a lot of the other ones, though. I mean, this one is $900 a month. But so here are pictures of the roof. I'm 100% on board with painting that, right? I think it would make it look a lot better. They did mention, you can't. It's really difficult to tell if this roof is leaking or not. Stuff like this bugs me, right? Like this is just uh, it's an easy fix. Hopefully, after getting this inspection report, that was just done. Um, but all the the deferred maintenance as far as all the rotten wood, like hopefully the plan is not to just go and paint over this. Hopefully, all the rotten wood is addressed, and then if there is still, a lot of this happens just from not being painted, right? Like the wood when the wood's exposed. I mean, some of it happens because there's a problem with the drip edge or something, and you're getting water in there. But a lot of it is just if it's just not properly maintained over time, um, wood just rots when it's exposed to the elements. So hopefully, as part of that painting and exterior upgrade, we're also thinking about fixing some of this. All these surfaces that are rotten and actually need to be addressed underneath the windowsills. So if I were going to buy this and hold it long term, I'd be very interested in making sure the whole exterior is watertight. When you just have all of this sort of damage to, around your windows, around all your soffit and fascia, it just leads to problems long term. I think we talked about this on every single one of his, where the downspout issue. Um, these are the solution I think that work pretty well because he was talking about the tenants when they mow the lawn they move these. But so this looks like, although the ones I like are like these big concrete ones that are really hard to move. I'm not sure if that's what we actually have here, if this is one of the plastic ones, but the appraiser's just pointing out like, okay, we need to just move this downspout a little bit further. And the reason the downspouts are important is because, getting water away from the base of your home. This one, I don't really even see why he's complaining about it because it looks like it is as intended. Um, I wonder what I'm missing there. But again, I think it's a plastic one because it looks like they've got a piece of concrete sitting on top of it. I'm not certain about that though. This could be they make really big concrete ones that I like the most because tenants can't just move them when they're mowing the lawn. But I think yeah, this one to me, I'm not sure. But the reason it's important is because that helps keep getting moisture in your basement, and moisture in your basement leads to foundation problems, right? And all kinds of other problems. You don't want to have mold in your home. Um, but again, I mean, there's just all these little things that I would really hope they've had a tenant in this property for months now. Okay, you have a shaky railing, you have no railing here. All of these things to me create liability for us as landlords, right? Like if it's been identified to us that hey, we're supposed to have a railing here and we don't have one, and we have a tenant fall down these stairs, or we know we have a shaky railing and that leads to a fall. Like that's those are the types of things I really want to be on top of. I mean, the cosmetic stuff is important too, but just the sheer amount of rotten wood, like that stuff gets expensive to fix if you have to, replace a whole bunch of it. And it's why I think it doesn't get done in a lot of properties. But the more you can keep that repaired and keep it painted, the less that it spreads. Yeah, again, you have these stairs that are off balance, or off, they're slanted. They don't have a railing, like that stuff. I don't know. Whenever I go through these, it's hard for me to imagine that this is acceptable to tenants, but it is. Obviously he's successful. He has a big portfolio. And like I said, I mean, some other people in these markets have mentioned to me, like, yeah, we just have lots of properties like that, and it's hard. It's just not. I guess it makes a lot of sense in a market that it is tough to afford. Where the rental rate doesn't really give you enough income to keep stuff in good repair, right? So, um, I'm trying to remember. Yeah, there's a couple lights out, not the biggest deal. Sometimes they'll just have dead light bulbs, and you'll get that in an inspection. But this was another one, right? Whenever you have like these trip hazards because these were built like this, these and the railings and all that stuff. Like I don't know. I think that it is problematic. It also makes me wonder, like, who built this? That this that they have more than one set of stairs that's like this, right? Like, I mean, that is just a little bit odd. Makes me wonder if it was like a DIY job or something, which, there's nothing wrong with that if they know what they're doing, but if they have, things like this, like, it takes a very little difference in step height. Like if you have multiple steps and they're not uniform, it takes a really small difference to create a situation where people trip regularly. And this definitely looks like it falls within that range. Yeah, they are getting some water in the basement, but they didn't say how much. They mentioned here, they should have a pipe jack, which is like this thing that, a lot of times when you have basements and you have, basically they're saying like in this area there's not enough support for the floor, and you just have these big jacks that like it looks like a pipe, and you can just screw it and it holds it up. Yeah, if they are saying we need one of those, I would definitely add a couple. They're not super expensive, and you're just protecting your property, because there are a few places where they mention that the floor is sagging or slanted. Yeah, unlevel is what they're saying. But a- probably an easy fix if that's if it's near those areas. Um, but yeah, overall, just a lot of these things, like, okay, we don't have covers on our outlets and switches. Like, I realize these are probably in the basement, but it's still like stuff like this. And this doesn't even look like it's attached to anything anymore. So let's just rip that off, right? Like, I mean, that's the sort of things that, um, I think are low cost, or stuff that I want to do every time I buy a property, is address anything that could conceivably be thought of as a safety concern. And then even if it is like, okay, it's not attached to anything in here. Maybe it's, I don't know, old, whatever it is. It again looks like it's not plugged in, but okay, let's just get rid of it altogether so there's no question, right? Because maybe you have a tenant in there and they see that and they don't realize that, okay, all our wires are cut. Um, this was another, mentioned as a safety concern. They don't have this isn't piped down to the ground, and if I think, right, is that where the release valve is? So it can create a scalding issue if it lets the water out. Then, I think this was the furnace, and it was super old, but I don't even remember. I don't think, honestly, like, you definitely, if you want to invest in this one, I would suggest going through all of this stuff. And I think that a lot of it is stuff I'd want to address to try to turn around and sell it. I wanted to say there was one other big one though that I wanted to mention, but maybe not. Oh yeah, like all these little cabinet things. Like, I don't know, these are not an expensive fix. It's possible that these were done by the tenant since they moved in. If so, obviously, I mean, it's surprising to me. I've literally never broken a cabinet or drawer door off in a home I have, but I see this in properties all the time. So, maybe it's just a little bit cheaper cabinets or whatever it is, but, obviously if you're going to sell this, those are things that we'd want to fix. If the tenant did it themselves and they're going to stay in there. Oh yeah, there had been a leaky roof, but they're saying, yeah, it doesn't seem like it's still leaking. Um, I'm trying to think if maybe the stairs were actually the only other thing I really wanted to talk about. Yeah, that's on level floor. They always repeat everything in this particular inspector's their format. I don't like at all. Kind of older hot water heater. I think that's everything I'm going to talk about in here. Um, so let's get rid of that and let's jump into we get rid of the auditor website. Yeah, we already talked about crime. But so, okay, let's think about this. Let's say, you're buying it. Remember, this rental yield is a perfect month, right? That's a month where you have no vacancy and you have no repairs and maintenance, right? That's like you collected the rent, you paid the management fee, we're accounting for taxes and insurance, and that's it. So, not the best yield. But one of the things I want to point out, this is an unlevered property. I actually, we're really starting to see some of the risks of the levered properties on the Lofty platform. If you look at some of the co-ownership ones, there's several that there's discussions about, whoever's responsible to pay that mortgage, is either it's hard for them to afford it, or they don't feel like there's the financial incentive to keep paying the mortgage. This is especially true on the ones where somebody has sold out all of their equity. You've seen these comments today. If you look at I don't know if it's Pillar or Pilar, I'm not sure how they say that, but if you look at the Discord for that property, there's a note in there for that. But even some of the other co-owners are already talking about, like, hey, it's becoming obvious that it's not the best model, especially if they sell all the equity and then they're, or even if they sell 90% of it and then they're paying that mortgage payment. So it becomes difficult, and then if they don't pay it and the Dow has to, then a lot of those properties turn into like a negative income, where you're actually losing money every month, or just close to zero yield. So I think avoiding those is something I'm going to do more and more, and where we have, so I think accepting a lower yield in uh, a property with no debt, or if we can get debt inside the Dow where the Dow gets a DSCR loan or something, it would be a lot more interesting, right? I want to see the property be able to cover it. So I actually really like that this is, I've been buying more of the ones that have no debt or have very low debt. And so, yeah, all of those are going to have a lower yield. And here, yeah, this is what you have. It's not terrible, but it is, I'd want something more than this to make me want to buy this property. And so, okay, let's look at the value add situation though. Okay. He's saying, okay, we're going to do some exterior upgrades and we're going to get $20,000 in value. Let's just take that at face value. I think it's perfectly possible, especially like I said. I mean, I think it's most common that stuff like that, painting, and cosmetics will help you get a better sale to owner occupant. So we'd have to look at it sometime out in the future. Once our tenant's out is when that sale is going to happen. But so let's think about this as a 1 year hold, right? That's sort of what he talks about in his swing trading book, and I think it's a perfectly good model. I actually really like, I've always had shorter holds than I think a lot of real estate people do, and I think that it is a model that works really good to maximize your rate of return. Um, but okay, our current value is 75,000. Let's say we're accepting that. Now remember, we're paying more than that though, right? We're paying 5% more plus these other, closing costs and Dow costs. That's all baked into what we're paying for. But that's the case with every one of these properties. But I'm just so okay. And now let's say we add $20,000 in value, and now he's saying, one, I don't know where these funds are coming from, right? And so at the moment, I'm going to just ignore that, and I'm going to say, hey, we added $20,000 in value, and we paid for that with rent as it went by, or maybe out of the operating reserve that was raised. I'm not sure. I'm not sure where that money's coming from. But so, okay, now it's worth $95,000. We sell the property, net, we have selling expenses. I always use 9%. I think, it's possible we get something lower than that. Although usually the cheaper the property, the harder it is to get your selling expenses down as a percent of your sale price because there's certain things that are fixed. So okay, now your net sale is 86,450. There's going to be 1,606 tokens outstanding, and so that net sale per token is $53.83. Well, right now, if you're buying these at $50, you're paying $52.75. That's the $50 cost plus Lofty's 3% plus the 2.5% that's going into the OR. If we, ignoring the OR at first, because maybe we're using it to pay for the value add, maybe we just use it during that hold period because something needs to be fixed. Um, our total profit per token on that sale is $1.08. That's only a 2% return on that sale, based on, and so that's just taking this 20,000 at face value, adding it to, oh, cancel that, adding it to what our current appraised value is. And so it's, to me, and so you can add that, okay, we also got the 7.25% yield, right? So like, okay, you buy it today, we hold it for a year, you're getting 7.25%. Really, that doesn't work unless your tenant just extends for half a year. I'm assuming it's a market where you want to sell in the springtime, uh, just like most of the US. It's possible that that's not the case, but if that is what you're doing, we're going to have some time period in there where there's no tenant and maybe it hasn't sold yet. But so, okay, so we have the 7.25% rental yield, assuming everything's perfect and there was no vacancy and no repairs during that holding period. And then, so we can add those two together basically. It's 7.25 plus our another 2%. So we're going to make a 9% return to buy it, get it ready to sell, operate it for a year, sell it. This is just not a very attractive deal to me. And like, okay, let's say we do get to add back the full value of the OR, which, I'm just doing this to be really generous because there's zero chance that you're going to have the full value of it because, you have to sell 100% of the tokens to get $1.25 per token into that OR. Well, you're not going to have that because he's going to continue to own some, right? But anyway, even if you add it back in, this is adding the $1.25 back to the $1.08. Then your ROI is only going up to 4.42. Again, we add that to the rental yield. Okay, I'm making an 11.5% return on this deal, all in, right? It's really hard when I compare that to the properties that I look at on Mogul on a regular basis to want to buy into this deal. Which reminds me, please like and subscribe, tickle the like button. In the description to this video, I have links to all the other platforms I'm currently investing on. Please do your own due diligence if you're going to invest on any of those platforms or any properties that I mentioned, like this one or any other. Just because I've talked to you about it, don't just take this for, don't take my word for it. Do your own due diligence, look into it. Um, and also in the video description, there's a link to our Discord. You're welcome to join that Discord. Come on in and talk to us about this property or any of the other platforms we're investing in fractional real estate on. Okay, but so what's the opportunity here, right? Because that's, even if we can just add 20,000 to the current value, it's not enough for me to be excited about that deal. I mean, taking it exactly at face value for what they say. Now, we talked about these small markets. They are very inefficient markets. There's very few properties that are bought and sold. And so maybe the Zillow estimate's right, where it says it's 90 something already. And then if we added 20 to that, all right, let's say it's already 90,000. Okay, then we're starting to get somewhere, right? All of a sudden, we're starting to get some real ROI. But it is, the reason this becomes problematic is because even though $20,000 increase on a, $80,000 all in cost as a 25% return, once you add in selling expenses, it gets real, you're not selling expenses and then Lofty's fees on your buy side. You have to have a much bigger return than you would expect in order to actually make a good return on these sales, right? I mean, because now we're saying, okay, 90 versus we're actually paying 75. So, we're paying 75, 78, 500 or something like that. Um, I think, and then obviously if the Redfin number was right, then we're making a ton of money on that sale, right? And so it's possible that we could do significantly better. But if that's what the plan is, right? If it's a value add deal where we are going to get it sold relatively quickly, so we can actually experience some of that value, and I'd like to have it outlined really, really clean. Like, okay, I think we're going to do this. We're going to hold it until this date, and then we'll plan to sell it then. And then obviously we can always vote to change our mind on those things. But having a plan outlined of how we get the big bucks, right? How we're actually going to get a large return on this investment. Because otherwise, I'm just looking at this and I'm buying a pretty dilapidated home in a market that is shrinking. And, I am getting an unlevered yield of 7% on the months that there's no vacancy or no repairs and maintenance. That's not terrible, but when I compare that to, okay, I can get a pad split in Georgia that's kicking off 11%, 10 or 11% yield, and it's in a market that's growing, and it's, where we have a nicer property to begin with. It's really hard to make that comparison and be like, oh, this is the deal that I want. I think this is taking some steps in the right direction, though. Like, he's outlining like why what we can do to turn this into a moneymaker for us. And he's also, this is the smallest profit that he's bringing it to the platform now. Because he bought it for 65, and he's only, I guess it's really just based on what it appraised at, though. Um, so I don't know, but I think like taking us along for the ride on that swing trade is what I'd really want out of his properties, right? And obviously he's got to make some additional return for himself for being the one that found the deal and put the thought process together. But to buy into these deals in this market in the condition they're in, just for the yield, unless we're getting a fantastic yield, and we're able to mitigate a lot of these risks. I have a hard time with it, so I'm not sure. I don't know. Like I said, I mean, I think this one is a step in the right direction as far as like outlining a plan on how we're going to create some value for us. But then, okay, how are we going to capture that value? I want to know about that, right? Is the plan, is this going to be one that we don't think is going to be on the platform long? We're going to actually fix it up and then sell it for that profit. If not, are we going to get a higher rent, right? Is doing that work going to increase our yield? But also too, who's paying for that, right? Is that because it says the current owner plans to do that, but that's are we raising funds in the DAO to do it? I'm just not sure. So I'd like to see it like fleshed out a little bit more info on how we're actually accomplishing it. But I like the direction that it's going, right? I think that it is. Uh, he's I mean, you can read about him and read his book, and also, he's an entrepreneur. He's making, he's consistently generated 60% average annual returns for himself and his investment fund. That's the ride I want to be on, right? I don't want to be on, I'm making 2 or maybe 4% plus 7%. If I'm going to invest with him, I want to be part of that, right? I don't know. Or otherwise, if I am just buying a property that's just sitting on it and it's just yield, I just want it to be more buttoned up than this, right? I want it to be, I'm not worried about that furnace going out, or, the tenant falling because we don't have a railing, or we have, a bunch of rotten wood, and oh, now we starting to have some structural issues. Like all of that stuff, um, if I'm just, getting a small monthly yield and that's all I'm holding for, uh, I don't want to have any of those worries, right? Like, although, I mean, if you think about it, you are still significantly higher than the yields on a lot of the arrived homes properties, but those tend to be like really new, uh, you know, it's weird to compare them to this because those are even worse yields. But I think that like your risk adjusted. But one of the things too is those yields are. This is perfect world yield, right? This is not thinking about, okay, I have to fix one thing and it wipes out a month of, if I change a hot water heater, uh, that's more than a month of rent gone, probably, or around a month. So I don't know. That's my thoughts on that. If you are going to buy into this, I'm interested to hear about it. Hopefully, Josh saw this. I appreciate you watching the videos and giving us feedback. Sorry, I'm never giving you a glowing review, but if you have, he's been great about jumping in and sharing some additional thoughts on these. I think giving us some more detail around what your thoughts are on that plan would be fantastic. If you've made it this far into the video, um, because I do. I think clearly like there's money to be made in this market because anytime there's an inefficient market and it's clearly by making the money on the delta between the buy and the sell, and if we can get in on that where we're a little bit closer to the pre-value add part, it seems like there could be deals that we'd want to be involved in. And I know that some of these other ones are still selling and people just have a different risk profile than me, or just have a different view on how a property should be maintained. But anyway, I think that is all for today. I don't think I told you to hit the bell. Still don't really understand what the bell is because I never hit the bell and I still get alerts for videos. If anybody knows, feel free to put a comment into this video and say, Joe, you're an idiot. This is what the bell does. I can't believe you've been on YouTube this long and you still don't really get it. Yeah, I think that's everything. Sorry this was such a long one, but lots of stuff to talk about, and I think I talked extra slow today. That's it. Until next time, I'm going to just keep making mistakes so that you don't have to.